Guys, gold is up over $100 an ounce to around $33.50 in the last day. Is it wise to buy gold here, or is it too late to buy gold? Funny thing is, I did a video like this 2 years ago when gold broke $2,000 an ounce, when Silicon Valley Bank was being bailed out and everybody thought the dollar was going to crash and the banks were going to fail and everything like that. And the premiums on gold and silver spiked up during this so-called kind of panic. So if you watch my video, which I'll link at the end, you'll see the premiums for 1 ounce American Gold Eagles were about 10%, and the premiums for 1 ounce silver was about 76%. That's right. Silver was trading for about $23 an ounce, and it was selling for about $39 for 1 American Silver Eagle. So even with silver $10 higher now at $33 an ounce, you'd still be underwater if you panicked and paid a 76% premium for that silver. Now, the funny thing is, a coin dealer in Florida that I show his videos because he shows the premiums that he's buying and selling every few days, he said most of his business in the last few days is strictly gold. A lot of people selling gold and even a good amount buying gold, and that silver is effectively dead. He didn't even show his silver premiums on his video, only the gold premiums. So much for that silver squeeze, right? So why is gold up so much in the last year or two, and more specifically in the last day or two with this big jump of $100 in one day? Let's take a quick look. So the short answer of this $100 move in the last day is because of the Chinese GDP data coming out, and they lowered their yuan fixed price. So the Bank of China lowered the reference rate to 7.21, which is much weaker than yesterday's 7.2096. And their home prices have been falling for the last few years, so Chinese people are putting their money into gold instead of housing like they used to. And if they think the Chinese yuan is getting weaker, they want to not hold it and put that money into gold. So that's part of it. But the longer term reason is these orange bars here. That's central banks buying of gold in metric tons. And you see, they weren't huge buyers in the last 10 years or so. Only after the Russian invasion started and the US froze Russian assets in the US and in Europe in T-bills and things like that, did other central banks, including Russia, China, India, they started to look at that and say, if we ever run afoul of the US, maybe they're going to seize our assets as well. And so a lot of these central banks have been buying gold instead of buying US Treasury bills. And so this is a large part of the reason why gold has had this run up. Now, are they going to keep buying at this big pace forever? Probably not. So nothing goes up forever. Trees don't grow to the sky. So don't get super excited that you need to put every last dollar into gold just because it's going up now. If you've never bought an ounce of silver or gold in your life, and you are now just considering it just because you see it on the news and all this stuff, do not go all in and put all of your money into gold or silver. You really don't know where it's going. And usually when everybody is jumping into something because they see it in the news so much, that's usually the top. So nobody knows how much higher gold is going to go. And if you knew so much about the future of gold or silver or stocks, you would have bought it in the last year or two, or better yet, you would have put all your money in Nvidia, right? Now, if you dollar cost average every month or buy every few months when you have some extra money and you've been doing this for many years, there's probably no reason not to continue doing that. But we are getting a little frothy in the gold price here. Now, if you're one of those people that buys whatever the hottest item of the day is, you should probably not buy a big amount of gold or silver or anything right now. If you're the type of person that was going all in on Cabbage Patch dolls in the 80s or Beanie Babies in the 90s, or all in on internet stocks in late 2000, or if you were buying multiple houses in 2008 because you knew that they would just keep going up, you should probably take it slow on putting all your money in gold right now. And here's a good point that Vermilion Enterprises brought up in his video today. If you are very old and never bought gold or silver in your life, it probably won't make a difference in your life to start doing it now. So don't listen to the late night commercials on the news channels that try to scare you into going all in on their overpriced gold or numismatic gold or whatever overpriced thing they're trying to sell you. The dollar will continue to die with a whimper, not a bang, just like it has been doing since the Fed was created in 1913. So don't just go dumping all your stocks or bonds or whatever you have to go all in gold because you think the dollar is going to go to zero tomorrow. That's most likely not the case. Now, if you have a plan to sell some or all of your gold in the near future because you need to buy a house, pay taxes, or some other expense, or put your kids through college or something, it may be a good time to sell while it is going up instead of when it is going down. So you don't have to sell it all in one shot. You can scale up as it goes up a little bit at a time. And please do not listen to the people in the comments who say, oh, don't sell any gold. You're dumb for doing that. It's going much higher. They don't know for sure. And more importantly, they don't know your particular situation. So you have to do what is right for you. There is always a reason for somebody to buy gold today or sell gold today or just sit on it and not do anything. You have to do what's right for your situation. Now, gold doesn't only go up, it also goes down. And if you have never sat through a big drop, a long big drop in the price of gold, I can tell you it is not fun. So I was definitely kicking myself for not selling some gold around 2011 when it went to like $1,850 an ounce. I remember sitting in an internet cafe in Brazil when that happened. And so I wasn't in the US to actually try to sell some at that price, but that price did not last very long. And it dropped and stayed down for many years after that. So usually big run-ups don't stay at the peaks very long. If you have any inclination to sell some gold, now might be a good time to consider doing that. And for those people that only think gold can only go up because they've only been investing in the last 5 years or so, let's look at some history. So if you've never seen this type of table before, it's investment returns by asset class. And it is really helpful to show you that nobody really knows what's going to go up or down in any particular year. And things that are on top one year may be down at the bottom the next year, like emerging market stocks up 71% in 2009, but down 21% in 2011. So the people that say gold goes up every year, no, it doesn't. This year was up 20, up 26, up 6, minus 29%, minus 1%, minus 12%, up 9%, minus 3%, minus 10%. So this is a nice reality check, because if you think you know what gold or stocks or REITs are going to do any year, were you all in emerging market stocks in 2009 and then all into REITs in 2010 and then all into Canadian bonds in 2011 and back into small caps in 2013, et cetera, et cetera? Even Warren Buffett cannot pick the outperformers every year versus the low performers. And that's why I say you should diversify. Don't put all your money into REITs or gold or large cap stocks or international bonds or anything. Have a little of everything, because nobody really knows what they're going to return every year. And in the years that these things are doing well, it is probably a good idea to sell some of it. Had you done that in 2009 with emerging market stocks, you would be very happy the next year. And if you did that with REITs in 2010, you would be very happy because the next year they only went up 5.5%, right? In 2021, REITs were up 31.2. The next year they were down 31.1. And so looking at this chart of the GLD, the gold ETF, going back to 2005, this was the peak in 2011 at the end of August, beginning of September. These are monthly bars here. And this lower purple line is the 50-month exponential moving average, and the price is always going to go back to that when it gets extended above that. So you see it got extended here, it went back to it and below it for a number of years until it finally got above it, and now we are getting stretched way above it again. So if you do the math on the price of gold versus the exponential moving average here, this was extended about 63% above the 50-month moving average. If you do the math here, we are about 52% above the 50-month moving average currently. So can gold go a lot further and go even a bigger percentage above the 50-month exponential moving average? Of course it could, but the likelihood is that at some point it's going to go back and hit that 50-month. Now that may mean that the 50-month continues to go up, and so maybe the 50-month will be somewhere here or here, but eventually it will go back to the kind of average. And as you see, the people that bought here, because this time is different and all of that, if they bought here, they really did not get back to even or positive until like 2022, 2023. So like 10 years of sitting on about a 40% loss at its lowest point. So if you have any inclination of selling, don't get greedy. Sell some now if you need the money for something, because if this doesn't last and we go back to down 40% for 10 years, you will be kicking yourself like I have been for a long time. So there was a time when central banks were selling their gold off, and the famous, I think it was the brown bottom in the UK, when the UK sold the rest of its gold at the absolute bottom of $250 an ounce. There will be a time when central banks may be saying, we don't need all this gold, or the risk of the US taking our assets has been diminished or something like that. And if they start selling, no amount of individual retail investors buying will hold up the price of gold. They are what moves the markets. So gold doesn't go up forever, it doesn't go down forever, but it kind of follows a trend. Sometimes it gets out of whack. That could be an opportunity for you if you're thinking of selling. And when it gets out of whack to the downside, it could be an opportunity for you if you're thinking of buying. Don't go crazy at either extremes. And if gold keeps going up and the stock market keeps going down, there will be a point where it will make a lot of sense to sell some of your gold and buy some good stocks that pay dividends and have low price to earnings ratios and things like that for the long term. So keep that in mind. And if you want to see how to buy gold without paying too much of a premium, watch my video here. And if you want to rewatch my video when gold went above $2,000 an ounce, watch this video here. Hope you like this one, guys. Thanks for watching.